Good evening and welcome to today's Market Close Report. Let's start with the numbers from Wall Street. The Nasdaq closed at 26,247 points, up 1.71% in a very strong session. The S&P 500 finished at 7,398 points, gaining nearly 1%. The Dow Jones Industrial Average was essentially flat, edging up just 0.02%. Right from those numbers you can see the market was deeply divided today. The 10-year Treasury yield fell to 4.36%. The dollar index edged lower to 97.84. The offshore yuan held steady around 6.80 against the dollar. In commodities, WTI crude settled above $95 a barrel. Spot gold surged sharply to close at $4,713.8 an ounce. Bitcoin also moved higher and is currently trading around $80,700. The defining feature of today's session was extreme divergence. Capital was almost entirely directed into semiconductor and artificial intelligence-related tech stocks. Intel soared 14% and Micron surged 15.5%. The market's trading logic was incredibly pure, centered entirely on the AI theme. On the other side, healthcare was the weakest sector, and Chinese stocks listed in the U.S. also came under pressure, with the Nasdaq Golden Dragon China Index falling 0.47%. Let's dig deeper into today's price action. First, the market completely ignored several factors that would normally cause concern, such as heightened geopolitical tensions in the Middle East, elevated oil prices, and consumer confidence hitting a record low. This collective immunity to bad news is a clear signal that the market is in a very strong trend. Money did not leave the market. Instead, it is making highly concentrated bets and hedges. But here is a structural signal that deserves our close attention. We saw the ultimate risk asset, tech stocks, rallying at the same time as the ultimate safe haven assets, gold and treasuries. This is not a characteristic of a healthy bull market. It suggests that on one hand, the market is frantically chasing the AI growth story, and on the other hand, it is deeply worried about systemic macro risks. This fractured pricing structure is inherently fragile. Now look at the relationship between currencies, equities, and bonds. The stock market showed strong risk appetite. The bond market, with yields falling, reflected recession expectations. And the weaker dollar provided support for risk assets. The three are not resonating. The logic of stocks and bonds is completely contradictory. For Asian markets tomorrow, this means they will likely open higher, because the surge in U.S. tech stocks will directly boost Asian semiconductor and consumer electronics supply chains. But whether they can hold those gains is questionable. The logic driving U.S. stocks, AI capital expenditure, does not fully align with the core challenges facing Asian markets, which are domestic demand and exports. We need to be cautious about a scenario where Asian tech stocks open higher, but other sectors lack the will to follow, causing the broader indices to fade from their opening highs. Let's summarize today's key conclusion. U.S. stocks were the absolute sentiment leader today, but it was really just a handful of mega-cap tech names within the Nasdaq. Asian markets and the non-tech sectors of U.S. stocks were the clear laggards. The turning point today was not a specific market, but rather the market's internal confirmation of the AI theme right at the open, which then triggered a one-way rally that ignored all macro news. For tomorrow's trading, our strategy leans toward a controlled long position. If U.S. stock futures, especially the Nasdaq 100, continue to show strength on Sunday evening, we could consider lightly building positions in semiconductor and AI-related ETFs or leading stocks at the Asian Open. However, if there is a major escalation in geopolitical conflict over the weekend, or if U.S. futures turn sharply lower before the Asian session, we should abandon all plans and move to the sidelines. We also need to watch for key invalidation signals. If the Nasdaq breaks below 26,000 points, if WTI crude breaks above $100 a barrel, or if the 10-year Treasury yield quickly rises above 4.5%, it would mean the current market logic has fundamentally shifted. That concludes today's Market Close Report. Thank you for watching and we will see you tomorrow.